We're going to get to Jim Paulsen from the Leuthold Group and our own Mike Santoli, try to get their thoughts on where this market's headed later today, given the gyrations that we've already seen this morning and some of the Dow component news. And then, of course, the Moderna news yesterday, which seemed to propel us forward. The question is it one step forward, two steps back, one step forward? Where are we, Jim?
Well, I don't know about the near term, Andrew. You know, who knows? But I think we're kind of in recovery here in the stock market and in the economy too. For me, the biggest near-term thing is what Greg Ip just talked about. I think we're en route now to the next several weeks of data that's bouncing and will come out better than it was in this month of April. And I think if you see data starting to pick up, it's going to reconnect Wall Street with fundamental information again, which I think will take some of the emotion that's been so prevalent here because we've been kind of divorced from fundamental information, which will help. And then in addition to that, with so many states now reopening activities, you're going to see data, I think, continue to improve as we go down the road. You put that together with a market that if this S&P 500 could break 3,000, I don't know if it can, but if it does, you're going to see a lot of technicians looking at this differently as well. I think that's the 200-day moving average. If it gets above that and you got better data coming and there's some discussion of whether we're heading for recovery, I think there's some potential upside here.
Hey, Mike, you know, people talk about sort of what the baseline here is and where the pressure is or the support levels are. How strong do you think this market really is? You know, Joe, Becky, and I have this bet going. I'd much prefer to lose this bet insofar as at the beginning of May, we sort of thought, or at least I thought, it'd be harder for the market to go that much higher, and here we are.
Well, it actually has been harder for the market to keep up the same pace. I mean, one of the things you have to keep in mind is before yesterday, market was pretty much going sideways for 4 or 5 weeks. And in fact, the average stock had a pretty good little pullback within the indexes. So I think the big feature of yesterday was people found themselves, big investors found themselves underexposed to the reopening theme, the idea that things could go smoothly, that the economic cycle could quicken from here. And so it was too crowded on the side of the boat of defensive, big growth, quality stocks. And there was a big rush for the cyclical, small, risky leverage, all the stuff that nobody wanted going into May. So does that continue? Is that a huge inflection point or a tide change in this market? I don't know, but I think just to back up on what Jim said, it is true we're going to get this incremental reopening improvement in activity. And if you're bullish about how that goes, you're not going to be proven wrong for weeks or months. I mean, in the worst case scenario. And so there is this time here where that can play. The big question is, do people start selling the Microsofts and the Amazons to fund the other stuff? And that would mean that the overall indexes could be stuck for a while.